in this market. Devang Mehta from Spark Private Wealth Management is with us on this leg of the show. Devang, thanks for joining in. Season's greetings to you. I am sure people are really getting down and ready to celebrate given what the equity market has thrown up this year, right? You tell us, what's the advice now at these elevated levels where almost everything has started running up?
Surabhi, season's greetings to all of you, all your viewers and the entire team at CNBC-TV18. Also, a happy 25th birthday to all of you and a newer wishes in advance that the year be extremely bullish in terms of everything for all of us. Yeah. So yes, the advice what we are giving is that this market earlier started with a sort of a FOMO, right? It's a fear of missing out, is an emotion which everybody had while we had this fast and furious rally. That's getting into more. The FOMO is now getting converted to something called JOGI, JOGI, which is joy of getting in. Right, so everybody wants to sort of get onto the bandwagon. Everything and anything is sort of doing well. This is in no way saying that we are near a correction or we are anticipating a large correction. No, not at all. I think if you do a little bit of an attribution analysis of why these markets are doing well and why they are supposed to do well, I think it's a confluence of global macros, a confluence of our local macros, micros, particularly the earnings growth and the anticipated earnings growth as well. So there's liquidity from the domestic market. India is on the top quadrant of the spreadsheet of every foreigner. Of course, we are still anticipating flows which have been sort of elusive so far. I think there are a lot of factors which go into it, be it capex, be it credit growth, be it a strong discretionary consumption from Indian side. My sense is that we are getting into from strength to strength. Yes, ideally some ebbs and corrections will always be part of structural bull market. But yes, you should sort of put your money, at least if not lump sum, then at least into tranches for the next few months still.
Joy of getting in. That's a new one, Devang. Morning, Reema here. In our last conversation, you said you were very bullish on the capex credit themes, and you had names like a Siemens, L&T, Hitachi Energy, Timken, which you recommended for your clients. Now, any new ideas? The market breadth is getting wider. Stocks are now a lot more deeper, even the small in the mid cap universe. So, any fresh ideas from Spark?
Yeah, I think, see, what I would try to sort of get into is more of themes and sectors. Yes, stocks which you named are part of our recommendations and client list and client holdings as well. Most importantly, what we have seen, Reema, is that the capex theme, the public investment or the private investment as a theme has sort of widespread participation in terms of not only sectors, but also down the line, a lot of mid caps, a lot of small caps, as well as large caps and mega caps are participating in this rally. Now, yes, capital goods, power ancillaries, even power businesses, companies which lay down the power ancillary or support the entire power value chain. I think all these companies are excellent. So companies you named, some of them like Siemens, some of them like Timken, which is into motion management, of course, more known as a bearings company, but does extremely specialty type of bearings. This is one of the companies that we like. Hitachi Energy has been in our recommendation list since long. And now these are companies which we keep on sort of adding. There is a company called Pitti Engineering, which we again sort of feel that it is also slated to benefit a lot from the infrastructure as well as the capital goods type of ordering activity, and of course known names like L&T and all, which are sort of going from strong order book. Every single day you see orders flowing in for companies like Siemens and L&T, and even the execution has picked up. And most of these companies are showing great numbers in terms of even expansion of ROEs as well. So my sense is, as a capex theme, I think capex as well as credit growth, both of these themes probably going forward would keep on doing well.
Okay. That's a couple of names on the engineering side. Devang, PSUs. I mean, it's been such a year. I don't think too many people could have predicted it. What do you make of it? And if you were to buy any PSU stocks fresh, which would those be? Throw in a word on Hudco if you've had a look at the company recently, because the stock has completely gone on a tear. By the way, Hudco's up another 19% as we speak.
Yeah, so particularly don't track Hudco, but as you rightly said, most of these PSUs had sort of a long period of hibernation. I think without exaggeration, a lot of these companies didn't do anything for the better part of the last decade, be it the NTPCs or even the Hudcos of the world, or a lot of such Navratna PSUs also didn't do anything. I think this time it's more driven by earnings. I don't want to sound that it's different this time, but mostly most of these companies have started to get a lot of ordering activity. Most of these companies have started to sort of show balance sheet strength, even the P&L strength. And I think the times are such that India is seeing a manufacturing revolution. And that's why I think most of these companies are doing well. Real estate as a cycle. Now, Hudco seems to be a prime beneficiary as it is more into financing of houses and such. And it had a pact with the Gujarat government, which I think the news flow came yesterday. So my sense is that most of these companies which are getting orders, this has long longevity in a way. And yes, I think cash flows for these companies are also visible, which was absent during the past 5, 7, 8 years. So I think earnings, corporate earnings, along with cash flows plus a lot of execution pickup strength which these companies are exhibiting, I think we are still some time away to sort of peak out for this type of PSUs as well.
What about names like Zomato? It's been a comeback here for these new age tech companies as they focused on profitabilities. Investors are seeing some green shoots as companies try and navigate and start getting profitable or are closer to their profitability. How will 2024 shape up for these new age companies? And in particular, any thoughts on Zomato?
I think, yes, this new age companies, you use the right word, Reema, that the focus on profitability. And that is where I think market loves corporate profits, right? So market is a slave of earnings as such. And most of these companies had were getting valued on their sales rather than profit. And in India, typically, where at least the secondary market more needs earnings and cash flows rather than only the sales. And the road to profitability for these companies, yes, was a little bit of a bumpy ride. But yes, some of these companies have started to get at least a bit positive, and some of these companies have also started to show some bit of profits. So I think, yes, there are investors waiting on the sidelines because these are companies which you probably want to own, but you are skeptical that there is so much of choice available in the Indian markets, as you rightly talked about, the small cap, the mid cap, the micro cap, as well as the large cap space. And there is still a lot of upside being seen for companies involved in credit growth, companies involved in banks. So yes, we don't own this type of businesses as such, but yes, they should be part of the hunting list once we get a clear trend of profitability in these companies.
Okay, Devang, we will wrap it up on that note. Thank you very much for joining in. You have a good new year, end to 2023, and a very happy new year as well. We'll talk to you again soon. Let's take a break on that note. We'll come back on the other side and put the spotlight on Traction Technologies. We'll talk about the company's business outlook, the strategy going ahead.
CNBC-TV18, embarking on a quarter century of excellence.
Thank you for watching CNBC-TV18 and do follow us on all our social media platforms for news, updates and more.